Studios, the AusBiz COB is the key stuff you need to know about the day in business and finance.
Hello, welcome to the COB this Thursday afternoon. I'm Juliet Sali. Lovely to have your company. Let's check in on where the market is finishing Thursday's session after yesterday posting its biggest gain in a year. Now, encouragingly, we have held on to those gains and added just ever so slightly to them, which when you consider that we were up by about 2.7% this time yesterday is quite extraordinary that people haven't come in and decided to press the sell button rather, because there's still a lot of uncertainty out there. The ASX 200 is up by 7 points at 8,958. So, you know, we're not very far off all-time highs despite everything that is going on out in the global geopolitical sphere, as we continue to hear that there is this potential diplomatic resolution to the Iran conflict, but Tehran says several terms of the agreement have already been breached. So that really gets us to our themes of the day: a shaky ceasefire. And investors, according to Van Eck, should brace for a more volatile and uneven market backdrop due to elevated oil prices and supply disruptions. Van Eck saying this is a risk of stagflation on a global scale. I mentioned that we're consolidating on those gains we saw yesterday. And then, of course, there's the global inflation hit, with oil prices about 40% higher than they were ahead of the start of the conflict. We're only just starting to see the ripple effects of that filter through. I had a great conversation with Jonathan Barrett from ETO Markets earlier today on the commodities, not just what we know with oil, with diesel, but also what those higher costs mean for our farmers. They may not actually even do some of their crops this cropping season due to the high cost of diesel, of trying to get things into the ground. That can have massive flow-on effects into things like wheat, barley. We really are just getting to the tip of this global inflationary hit. Having a look at some of the sectors that we are watching today, particularly energy stocks, as we see oil rebound. It had a little bit of a dip in terms of it had a huge dip, I should say, that big fall that we had yesterday. But then it paired some of those losses with attention turning to US-Iran talks scheduled in Pakistan on Friday. A little bit of a comeback in some of the energy players, like Woodside up by about 4%, Santos up by nearly 3%, and Karoon Energy up by almost 5%. Keeping an eye on the gold players as well. Gold is holding around a 3-week high. Northern Star looking quite good. Newmont Evolution, though, being sold off, and West African Resources out with a trading update as well, sending its share price down by 2.2%. And where we saw a lot of weakness was in tech players today. So that sector under the most significant selling pressure. WiseTech down almost 12%. Tech One off by 6%. Xero there down by 8.5%. A fair bit of corporate news out today as well. Bendigo and Adelaide Bank, it was one of the top performers on the ASX 200 and rising the most in nearly a year on a profit surge and cost savings. But this is no surprise for guessing through AI. Bendigo and Adelaide Bank, which is the biggest of the non-major banks in mortgages and deposits, wants to use a mix of AI and offshore tech giants like Infosys and Genpact to knock nearly 10% off its wages bill. Aurora also tumbling after flagging the impact of the war, particularly on its French unit, and flagging it's going to pause a share buyback as well. Ampol increasing the number of sites it plans to divest to 37 in a bid to win over the ACCC. Electro-Optic Systems down about 5.5%. It will pay a $4 million penalty for breaching continuous disclosure requirements. And Transurban says despite those higher petrol prices, March quarter traffic grew by 3%. Transurban noting that March geopolitical headwinds started late February, but it maintained revenue protection through inflation-linked contracts covering over 90% of earnings. I'm sure those of us who pay high tolls are just so happy the toll companies are still doing okay. All right, let's get to Jimmy Jang from GBA Capital joining us. So geopolitical risk rising, not yet fully priced in though, Jimmy.
Afternoon, Juliet. Yeah, we're kind of living a different market on a daily basis. So obviously, the ceasefire framework seems to be a lot more fragile than what the market priced in yesterday. There's obviously a lot of kind of fact checks we need to do, but largely I think the market is pricing in that the Strait of Hormuz is definitely closed. But depending even with that kind of news flow that came through just before the market opened this morning, the market hasn't really panicked as much as we anticipated before the open. So obviously at open we saw some bit of weakness coming out from the market, but I think the investors are still definitely having some more faith in this time in the ceasefire. So we haven't seen that much of a panic sell as of yet, at least today. So I think that we're seeing a bit more selective risk off positioning. So that's why we probably saw the tech struggling again, obviously with the potential stagflation environment that you just kind of touched on just then, Juliet. So we might see a bit more higher interest rate for the rest of this year. So that's why we're kind of seeing that big sell-off in the tech, which is kind of usual in this kind of environment, and obviously strengthening that energy-linked assets. So Karoon Energy, Viva Energy, also had a really good run today, which is kind of something that we expected. So the investors are definitely pricing in a bit more contained escalation rather than a full-scale regional war breaking out of this bombing in the with Israel and Lebanon. So however, if that Hormuz disruption does persist, that probably will change very quickly. So I think all the markets are kind of waiting on what the discussion will be with Pakistan throughout the week.
Yeah, a lot still to hinge, I should say, on those talks. As you rightly point out as well, though, a lot of what is moving momentum is very stock-specific news. So let's get into some of it. I mentioned Bendigo and Adelaide Bank before. I mean, the market seems to like that this company is streamlining costs and really relying here on AI.
Definitely. And look, the banks are probably a good sector in general in this kind of market too. A lot of the investors, especially internally, what we're kind of noticing is a lot of the investors wants to kind of like almost park their money in banks. Obviously with the potential interest rate hikes that we're going to see by the RBA in the next meeting, and the market definitely slowly pricing in a high probability of having a 2 rate hikes by end of this year internally in Australia. So in sector that obviously supports the banks in general. But yeah, Bendigo and Adelaide Bank with cash earnings up to about 7.6%, net interest margin expanded to about close to 2%, so 1.98, and they're obviously lending growth accelerated with the business lending side of the business. So the major cost out strategy, like you mentioned, with the AI incorporate, is obviously something that market also really rewarded the company share price today. So that's a kind of classic bank re-rating setup. So there's obviously lower cost base that the bank is improving, and also the improved efficiency with the AI, and obviously stronger margins therefore with this streamline. So market's definitely rewarded, and it's probably a good one to hold as well.
What about some of the resource stocks? I mean, we heard from Sandfire, we heard from West African. Do you like any of those?
Yeah, look, at the moment, until we see some more clarity around the Strait of Hormuz, and obviously the main important thing is the price of oil, I probably can't really say that I like producers, explorers, and any kind of in the critical mineral space at this stage, unless they got some really strong kind of news flow. So we probably saw Sandfire Resources obviously having a bit of a tough day today, obviously with the guidance to the lower end of the production, and that was also fueled due to the weather and also the maintenance issues as well, and that wasn't a bit of a surprise. So I think the market definitely saw that coming, so we probably got a bit more harsher sell than the others today, at least with Sandfire. So West African Resources, for example, had a bit slightly weaker, obviously with the I think that in our view the production was pretty solid in our view, but I think the market likely wanted a bit more upside surprise rather than just the slight beat. But in terms of generally speaking, the cost of diesel, like you mentioned, is definitely affecting agriculture in general, but also mainly for the producers as well. So it's becoming a lot more and more expensive environment for these producers with the cost of energy, and so I just don't see how that's going to be improved unless we see that bit more stabilization in the Strait of Hormuz and obviously the oil price, and that will probably take about 2 to 3 months. So we might see a bit more volatility in these producers. Juliet?
What do you think, though, more broadly about the fact that we're nearly at record highs? Like, are you surprised by that?
Not at the moment. I probably wouldn't be that surprised, but it definitely is something that was notable for us. And some of these names is something that we had in our portfolio for a very long time. And it's something that we've been monitoring. But it's so difficult, Juliet, to make any real decision right now because, as we have seen yesterday, after obviously the ceasefire, and I think we were one of the first markets that actually react to the ceasefire news because it happened after the market during the weekend for the US. So we obviously see such a strong bounce in the market in general, but with today, and I'm not sure what tomorrow will bring. It's such a I can't even call it a volatile market anymore. It's almost like we're going to see a coin flip every day to see what kind of market we'll be living in the next day. So it's very difficult to make any immediate changes, and that's what I've been kind of advising the clients as well. Is this is the sort of the market that you actually lose a lot of capital. It's just purely because of the volatility. So it's more so if you're comfortable with the names that you hold, just hold on to it. And after we find a bit more certainty, that's when we can probably make some aggressive changes.
So with what you're saying, I kind of feel like maybe tomorrow we just see everyone press the sell button because they don't want to take on too much risk heading into the weekend, maybe.
Perhaps, and especially with the we're going to see a lot of kind of how should I put it, two kind of sided opinions of what that talk at Pakistan will be. So a lot of people might be like, look, I just had enough. I cannot handle the volatility anymore. So if I'm slightly up or slightly down, I'm just happy to get out. And we're actually seeing that a lot of inflows, inquiries coming up from the clients as well. So look, there's no right or wrong answer in this market, because I do understand what the investors are coming from. But at the same time, the key thematic or the general advice that we give to the clients is, look, unless you're in absolute panic mode and you completely disagree with what will happen in the market, it's the best to do it right now. Just hold and monitor and find a little bit more certainty than what we're seeing at the moment.
All right, Jimmy, great to chat as always. Have a good evening. Jimmy Jiang there from GBA Capital. Well, speaking of stock specifics, the stock of the day was actually US stock, Intel, listed on the NASDAQ because we had a US special. So Andrew spoke to our experts, Mark Gardner from Embassy Markets, Mark Morland from Value 3.
I think that is the best thing that could have happened to Intel, because Musk is the consummate master of engineering and making stuff work. So what he's doing, he's going, well, we want to get, I can't get enough chips out of Samsung and Taiwan Semiconductor for what I need for robotics and automation. So he's publicly said he'll buy whatever they can make, and he's doing his own terafab, which the objective is to be able to do 70% of the capacity that Taiwan Semiconductor do. Now that's a big goal, but that's fine. He's always big at big goals. But what it's significantly doing is bringing it back to the US as well. So Intel's the only US fab. They've just been badly managed historically. The chance of Musk being involved in making that work, I think it's going to be fantastic for them.
The only reason they're still alive is basically because they're the only one that's still based in the US, and it was kind of like the Holden Ford argument for factories in Australia, like you've got to keep the expertise here. They've been on life support, but yeah, so you certainly wouldn't pay a premium. I don't know what necessarily, if they get something out of the engineering expertise. The new CEO, I believe it's a new CEO, apparently is pretty good, but yeah, look, I mean...
He's a builder at least.
Well, yeah, and he's got the best engineer probably in history partnering on, but as you said, Elon's there for Elon, and because he can't get enough chips.
You've worked hard for your money all your life. Now your money needs to work hard for you. Whether you're building, transferring or drawing down, the right information makes all the difference. At Ausbiz Retire, you'll find the latest news and insight from trusted experts all in one place. Ausbiz Retire is powered by RAN, retirement income done differently.
All right, let's have a look at the after close leaders and laggards on today's market. Now, we've touched about Bendigo and Adelaide Bank quite a lot. It was up by almost 9%. The biggest of the non-major banks in mortgages and deposits, with nearly 3 million customers, wants to use a mix of AI and offshore tech giants to knock nearly 10% off its wages bill. ASX also doing very well, up 6.5%. And Ampol doing so well, it's up there twice. Korean Energy as well, of course, quite a lot of upside coming through in those energy players. Let's have a look at the laggards, and we are seeing Aurora down by some 18%, warning of the impact of the Middle East on its bottom line. And of course, a lot of the tech players coming under pressure as well. WiseTech off by 11%, Zip, Zero, Megaport also coming under pressure. Let's have a look at what is happening in the small end of town. These were the winners. EBR up by 19.3%, Energy World up 8.5%, and in the bottom end of the small end of town, if we can say that, Globe Metals and Mining's up by some 22%. All right, tonight, well, of course, we touched on the concern of global inflation. Oil prices about 40% higher than they were pre-conflict. So this US core PCE index for February expected to show a chunky 0.4% rise for a second month, and that was of course before the surge in energy costs. We're also getting US final GDP for the December quarter, also backward looking, and US weekly unemployment claims, which are expected to edge up to 210,000. Tomorrow, Friday, we've got a few AGMs around, including GPT Group and Magellan Financial, and then we've got Japan Producer Price Index being released as well. So the market consolidating on those very impressive gains we saw yesterday, up 0.1% there on the CBO 200. The ASX 200 had an even brighter day, up 21 points, 0.25%, 8,973 points. So we're only 27 points away from that 9,000 point level. Pretty impressive, you have to say, despite what is going on out in the big wide world. That does it for the COB. We'll be back from 9:45 a.m. Eastern tomorrow.